All right, sorry, generating controversy. Some talk here in the studio about some of those reports. Well, we've got Dr. Chris David here with us. He's a futurist and tax expert. Also, he's authored 2 books.
No, over 6 books.
At least the tax manual, and then you also do have the tax strategy, so several of them. But thank you for coming on this morning.
Thank you for having me.
Well, much as you have some things in that report which was highlighted, which ordinarily shouldn't be the case concerning particularly as it has to do with the books and several other things that have been exempted. So there might be some misconception in terms of operationalizing some of those policies.
Yeah, I think that's why even the Federal Inland Revenue are embarking on a lot of sensitization, because going by those reports, it's very clear that people don't understand what the VAT regime is, or the VAT provisions is, what it covers, and the lot of exemptions. The basic food items, baby foods, pharmaceutical products, school fees, educational materials, all are all exempted. But from that report, it's like everybody feels that whatever thing they are selling should attract...
you've looked into this,
yes.
So break it down for us, what this means to the economy as
well. Well, first of all, I want to commend the government for the effort, because for the past 20 years, we've not had this kind of changes in our tax provisions. The objectives are quite clear. 5 objectives: raise revenue, SMEs, align our global laws with our local laws with global best practices, then promote infrastructural development. Now, these are the objectives. However, whether the provisions of this act can deliver these objectives is another question that we need to answer.
So when you talk about increasing tax revenue, and then the revenue sources,
yes,
can they achieve their aim with that?
Yeah, I'll get to that. Now, before I delve into the act itself, I would like to speak on why we should be paying taxes. And to do that, I want to compare Nigeria with South Africa. So we look at if you can go to the next slide, we look at the budget of 2020 and that of South Africa, which is 2019 and 2020. Looking at these figures, you will see that the budget of South Africa is actually 4 times that of Nigeria. Now, looking at the contributions to the budget itself, for South Africa, you can see tax revenue. Tax revenue is generating 87%, or is contributing 87%.
As against Nigeria's 22%.
As against Nigeria's 22%. So that means we are not doing well at all. And if we are complaining about lack of infrastructure, security challenges, education, government need to fund education, that means we need to change our perception about paying taxes. All over the world, taxation is the sustainable source of income to Nigeria. So Nigerians must change or imbibe the culture of paying taxes.
But I'm not sure that Nigerians don't want to pay tax. But, you know, some of the key questions that they've always asked is, well, yes, there was this question about multiple taxation, which hopefully this addresses.
Yeah, which I'm going to
and then let's talk about what they do, how they utilize those funds. Because you don't want to pay all those taxes and see some public official running you out of the road with your tax resources.
You know, the thing is that you can, just like the misconception we have, people might actually be thinking that there is so much. But this is telling us that we are not doing that much as we believe.
Oh, so are you looking at just this or how it affects the people who are paying? So you're looking at a bigger picture in terms of the contribution.
Yes.
But for those who are paying that, if they feel the pinch, how do you tell them that we're not doing that?
Yeah, because if you have so much to do and you're only generating little, that will also create that gap. However, let me take us through the act now Now, basically, when you look at the Act, there are three things that you can classify or categorize what the Act is trying to give to Nigeria. One is setting up threshold and tax rates. So the Act has been able to give us three classes of companies. So you have the small, medium, and large. Now, for the taxes they need to pay, you see company income tax, they're saying the small company is 0%. So for those having those running small businesses, they say you don't need to pay tax. Your tax is 0%. While
That's if you have an annual return of about 25 million.
25 million. So for companies with above 25 and 100 million, the income tax rate is 20%, while the large company is 30%. Now, there's what is called the minimum tax.
One moment, sir. On that one, 0% for companies that run 25 million naira
Below.
and less.
Yes.
How do we check those who may come up with smaller companies?
Yeah, so that's why in my opening remark, I said whether the provisions will deliver the objectives that government have said is another thing, because these things, the way the provisions have been set up in the Act, I don't believe those objectives will be met.
All of them or some of them?
Most of them will be met, because when you create such provision for people to take advantage of loopholes, especially
if you don't make 25 million, you'll be struggling to pay tax.
But he just asked now, how do you detect that some people
Have not broken medium companies into smaller companies?
Isn't that
Small
why
companies.
we have some of the provisions in place
Now,
where you can
but let's
monitor?
look at some of these provisions again. Another one is the minimum tax. Now, because people don't understand this minimum tax has even greater impact than the 7.5% that people are clamoring for.
How so?
Yes, because the new Act is now saying that whether you made profit or not in any year, the minimum tax you must pay is 0.5 of your turnover. So what that means is that if you look at your current operations, let's say 2018, because people are still preparing their 2019 account now, this 0.5% will actually triple the tax you need to pay, times 3 of the tax you need to pay. Because I've done the analysis, I've applied it on so many companies, and the result that we have is that companies are going to be paying 3 times the taxes that we were paying before. Now, you know what happens when the tax burden is too high? I've mentioned it before, that when the tax burden is too high, people tend to opt out of the tax net, just like what Aya just said. So these are some of the things that policymakers need to rethink, because you just set an objective, and the provisions to deliver those objectives, when they become too cumbersome, then people will find a way to resist your provisions.
Do you see that happening with this?
Definitely. Definitely. Because the 0.5, okay, if you look at the way the Act has been set up, it's okay, we want to promote SME. The question you ask yourself, how many SME do business among themselves? Most SMEs do business with what? The big companies. And this Act is not favoring the big companies because, one, you increase VAT. There is no compensating provision to reduce the burden of the big companies. So 0.5 is an increase on the income tax that the company is going to pay, which we call the minimum tax. And you have also set up what? 7.5% on VAT. So you are increasing 2 tax points. So the large companies are going to find it very difficult while you are trying to protect the smaller companies. So that speaks to the question of promoting equity.
You know, the last time I checked, this has not been gazetted yet. So a lot of the things we're still talking about, some will say we're still trying to project, make projections. Yeah, 7.5, we know about that, even though some people say it feels like 10%. But you talked about sensitization earlier. And the question is, so we have this these reasons the government gave, raising revenue, ensuring that our laws are in line with global best practices and what have you. And the question arises, so how will this be implemented? How do you think it should be implemented such that we meet those targets?
Yeah, that's what I'm trying to explain now. By the way, the pronouncement has been made. The act has come into effect 1st of February, and I'm sure Minister of Justice will gazette the act. So the question about speculation, there are no speculation. We know what the provisions are, and that is what we are explaining. Now, going back to what I was saying, you see that you mentioned issue of multiple taxation. In Lagos today, you still have what is called the consumption tax. So you increase 7.5 VAT, and you didn't talk about anything about consumption tax. So if you look at the slide, this slide that you see that I said Nigeria twice, because one, there is 7.5% as VAT and 12.5% as consumption tax. So that will not make Nigeria, or to achieve those objectives.
Okay, I know we barely scratched the surface.
Yeah.
But we'll revisit this matter. So that we can have a more expansive look. But we'll have to toss to Abuja so that at least the FRS might haven't heard some of these concerns, because it's an ongoing matter, so that they can keep looking at this. People need to be a lot more aware of what this actually means. So we'll have to thank you for coming on. Dr. Chris David is a futurist and a tax expert. Mark, bye.
Well, thank you, Chamberlain. We have with us in the studio Mr. Gabriel Ogunjemiluse, who is the Director Tax Policy at the Federal Inland Revenue Service. You're welcome to Sunrise Daily this morning.
Thank you. Good morning.
Good morning. Well, it would seem that what people thought, I don't know, the taste of the pudding is in the eating. In recent times, people have been getting notices from their banks and, even from the telecommunication companies now, who now make sure to tell you that some of your costs are increased because of the new VAT. Is what the law is saying different from how it's being implemented?
Thank you. What is being implemented is what the law says. If you consume services that are VATable, something like service rendered to you by your bank, or services rendered supplied by telecommunications, they are liable to VAT. Definitely the act will affect the pricing of such services. And that is what
utilities like electricity as well?
And definitely it will also affect electricity, because that one is not part of the services that are exempted from VAT.
So how has it been? I mean, have you received any complaints so far? You listened to our guest there, Mr. Chris, talking about, certain points, how this is going to make things a little bit difficult, especially for big companies.
The big companies, I would not say that it's going to make it too difficult for them, because there are some sections of the Act also that give some kind of palliatives to big companies, like excess dividend tax has now been amended to take out those taxes those income that have already been subject to tax, like dividend that is franked, or retained earnings that has earlier, which tax has earlier been paid, are no longer to be taken into consideration while you are applying the excess dividend. In the past, if a company has a total profit that is not up to the dividend declared, the total dividend declared will be taken as total profit and taxed at 30%. So this was also was said discourages a lot of companies from setting up businesses in Nigeria. Even some will land, some even relocated some other jurisdictions. And with the passage of the Act, we are reliably informed that some of them are now ready to come back. So that's also part we need to look at. So
there have been no complaints over the fact that companies now have to pay tax on turnover rather than profit?
The turnover is just a minimum tax provisions, and it's applicable everywhere in the world, even to individuals. Under individual, we have minimum tax of 1% on any individual that earns less than 300,000 naira a year. So if individuals, yes, in other jurisdictions you have minimum tax provision. It's not peculiar to Nigeria alone. And what we were having before is it's based on net assets, paid up capital, and also turnover. Then we are using turnover at 0.05%, but we have first of 0.125 of excess of 500,000 turnover. Now, there were complaints that taxing net assets, like taxing the capital of the company or the paid up capital, share capital. So, and we look at it because of, so if they say, let's remove that, let's just based on turnover. And don't forget that most companies, they do a lot of tax avoidance schemes by padding their costs, which will make their profits, I mean, at the end of the day, to be either run into losses and or do that. Yes, we have audit that is in place to check, but before the audit comes, something was coming in terms of minimum tax. So that is what informed the idea of basing it on turnover, and which we believe, yes, there have been complaints that it's too high, it's too excessive. Let's look at it and see how excessive it is.
How do you think this is going to impact the revenues that FIRS hopes to generate?
The intention of the act of government is to make the tax administration very simple, and also to make it easy for people to comply with. The intention is that it will open up, more taxpayers will come to the tax net, voluntary compliance. If the tax law is too cumbersome, definitely discourages taxpayers from complying. But with this, it is expectation, our expectation that more taxpayers will come to the tax net. And with that, the tax net will be expanded and more will come so that we have more money.
Well, I'm sure that we should keep an update, a progress report on that to see whether you're actually saying more people voluntarily coming,
yes.
Coming to declare their taxes. But how are you looking at the complaint of multiple taxation?
What we call multiple taxation, in some sense, may not really be multiple taxation. There are some taxes there are some levies, which ordinarily local government, when you look at local government has the right to pay some levies on some activities of businesses around their jurisdictions, which is, then we have state level and we have federal level. We should not forget that we operate a federal system of government in Nigeria. And we have these provisions of miscellaneous act of 1999, which gives jurisdictions to each tier of government the type of taxes taxes and levies that can be collected at each tier of government. So if anybody pays a levy, a tenement rate, for instance, at local government level, that tenement rate is an allowable deduction against the profit to be charged to tax at the corporate tax level.
I will let you finish your thoughts on this when we come back from this break.
Thank you.
Please stay with us. Mr. Gabriel Ogunjemi-Lucy, who's the Director of Tax Policy at FIRS, is still with us here in our studios. Just before we went on break, you were explaining something along the lines of multiple taxation. But then there's also the question of companies that are exempt from company income tax. So companies that have 25 million, just below 25 million.
Up 25 million below.
Yes, because some people say if you earn 25 million, you actually pay company income tax. Is that correct?
No, it's above 25 million that you
above 25 million. So maybe, I don't know how to, maybe 25 million and 1,000 naira.
The moment you cross that border,
yes,
you enter into medium sized companies.
Okay, so maybe people will find a way to stay there. Will they be asked to pay VAT? Yeah,
definitely. No companies that is exempted from payment of VAT. VAT is levied on goods and services, so it's a consumption tax. So if they consume, when they consume, they must pay VAT. And even when they consume from someone who refuses, who does not have the ability to charge, the law has not given the power to charge, they must self-charge themselves and remit to the service.
How would that work? I mean, I'm just trying to imagine, for instance, if maybe a restaurant business that is not high-end restaurants, maybe they're charging VAT, they should remit the VAT to the federal government?
No, restaurants, like when they are buying, don't forget that some food items are specifically exempted from VAT. While some things they use, like condiments and all those, so some of them are also exempted. But where they consume or buys their product from any company that is in the threshold, that company threshold must, the moment that article is vatable, we invoice VAT on it, and they will pay to the person that, because that person has is legally allowed by law to collect VAT on behalf of government and remit. So while remit will now set up its input VAT against output.
Okay.
But for those companies, then that input VAT is assumed to be the consumer of that input VAT, if it's below threshold, is assumed to be the final consumer of that item. That means the input will be charged against its profit.
It all sounds very complicated, but I'm sure that when people need help, they can always
Now we are
contact...
coming up with information circulars and guidelines, which is going to be released very soon.
Okay. One would have thought it would have been released by now, since
because the act was just gazetted, and we needed to wait for it to be gazetted, so that before we can come up with it. So, but the good news is that it has been gazetted now, since last week, so it takes effect from 1st of February. So we are just dotting the I's and crossing the T's now to get it out very soon.
Well, it will be interesting to see how many people eventually come forward to voluntarily declare their taxes and pay them as and when due. We'll look forward to that information. We have to thank you for coming on Sunrise Daily this morning. Gabriel Ogunjemilusi is the Director of Tax Policy at the FIRS.
Thank you for having me.
That's it for this segment. Gentlemen, do we have mail?
Well, we already had some of them, some Zemo and several others, they already gave their views. And we appreciate all of them. So there you go. That's the show today. Thank you all for watching. We'll see you again tomorrow. I'm Chamberlain Oso.
I'm Kayode Okikiolu.
I am Ayo Makine. Have a good day.
And I'm Aokwe Ogun Yusuf.